Hello viewers, welcome to my channel. I am Hasham Ali Khan. So already 15 problems I have completed on analysis of financial statements. The techniques are comparative statement, common size statement and trend analysis. So far we have completed comparative analysis nearly 12 problems. The last few problems we have done on trend analysis. In this video, I am going to explain you two more problems on trend analysis. After this, we'll go for common size statement analysis. So trend analysis already I have explained you in the last video that the first year will be normally be treated as the base year. The base year trend values will always be taken as 100 and the other trend values will be calculated by the formula current year value divided by base year value into 100. So by studying the trend, we can be able to give the comment on the financial statements. That's the advantage of this technique called trend analysis. So if you want the complete knowledge, watch the videos in sequence, one after the other. Then only you can be able to get the complete comment. Don't join in between. If you have not watched the earlier videos, I suggest you to go to the playlist of my channel. Select the subject cost control and management accounting. Select the video of techniques of financial statement analysis. Watch the initial videos. Get the complete command on the techniques. Then you come to this problem. I expect that all my viewers are having a printout of the problems which I have given in the link under my description. Always keep ready the problems before watching the video. Take a screenshot of these two problems. Then I'll explain all the points regarding trend analysis. Come on, see the 16th one. 16th problem I'm reading out. From the following data relating to the liability side of Tektronix Limited for the period ended 31st March 1988, you are required to calculate the trend percentage taking 1988 as the base year. That means 4 years data is given 1988, 89, 90, 91. So it is asking you to take the base year 1988 and then comment also. So here data is given share capital, reserves and surplus, 12% debentures, bank overdraft, profit and loss accounts, sundry creditors, outside creditors. So these are the items given for which all the values are given from 1988 to 1991. So how to calculate the trend percentages you can see here. Tektronix Limited calculation of trend percentage. Now particulars 1988, 1989, 1990, 1991. Share capital. All the items I have taken here. First year 1988 is the base year. Even if it is not given in the problem, we will assume the first year as the base year always. But here in the problem itself it is given 1988 is the base year. So for the base year, all the trend values must always be taken as 100. So here base year is 1988 and take all the base year trend values as 100 always. Not only in this problem, every problem. Then the values, the other trend values will be calculated by the following formula. Trend percentage is equal to value in current year divided by value in base year into 100. As usual, last two problems we have done the same thing, right? So we have taken 100 values for all the base year. Now next year, 1989, share capital 125, current year 125. So 125 by 100 into 100, you will get 125. Here you can see. Similarly, 130 by 100 into 100, 130. 150 by 100 into 100, 150. So share capital values we got. Now reserves and surplus, base year it is 50 and current year it is 60. So 60 by 50 into 100, you will get 120. 65 by 50 into 100, 130. 75 by 50 into 100, 150. Same is the case for debentures. The base year debentures are 200. Current year debenture is 250. So 250 by 200 into 100, 125. Then 300 by 200 into 100, 150. 400 by 200 into 100, 200. Bank overdraft, it is given 10. Base year 10. Current year 20. 20 by 10 into 100, you will get bank overdraft. You will get 200. Then 25 by 10 into 100, 250. Then 25 by 10, 250. Profit and loss account base year 20. So 22 by 20 into 100, 110. 28 by 20 into 100, 140. 26 by 20 into 100, 130. Sundry creditors base year are 40. So denominator will take 40. So 70 by 40 into 100, 175. 60 by 40 into 100, 150. 70 by 40 into 100, 175. Last one outside creditor, base year 2. So 3 divided by 2 into 100, 150. 5 divided by 2 into 100, 250. 4 divided by 2 into 100, 200. That's all. We have calculated all the percentages. Now it is asking you to give the comment on these calculations. First of all, the data given is only of the liability side. So we can give the opinion only on the liability side of the balance sheet. What are the sources from which the fund has been received? How the funds are applied, that means where the funds are applied. Assets are not given in the problem. So we cannot give the complete opinion about the financial position because only half balance sheet is given. Application of funds, we cannot give any comment. The first point you should write down like this. The information available pertains to the liability side of the balance sheet. No comments can be made on the usage of fund as application of fund is not known. How the funds are utilized, what are the assets of the business, we cannot give the opinion because information is not given. Second, however, in the light of available information, it can be said that company has made use of leverage and has raised debt in greater proportion than equity. If you compare these values, the company has used the leverage. Leverage means more use of debt. More use of debt than equity. You can see equity 100, 125, 130, 150. So only 50% increased, share capital increased by 50% till in 4 years. Whereas debentures 100, 125, 150, 200. That means double, 100%. The debentures have increased by 100%, whereas this share capital increased only by 50%. This means the company is using more of debt than equity. The company has raised the funds from debt, more from debt and less from equity. That is the first conclusion. Second one, the current liability have increased at a higher rate, assuming proper fund management policy. All the current liability you can see bank overdraft, bank overdraft, then sundry creditors, outside creditors. These three, bank overdraft, sundry creditors and other creditors, all are increased 100 to 250. Here 100 to 175, here 100 to 200. So all the current liabilities are showing an increasing trend. It indicates a greater turnover. The growth rate in profit is moderate, profit and loss account. 100, 110, 140, 130. Not high increase, but there is a moderate increase in the profitability. The overall trend position appears to be satisfactory. From this, we can give the opinion about the usage, about the usage of funds. That means the funds have been properly raised. Long-term funds, more has been raised from debt and less from equity. The profitability increased by moderate rate, whereas the current liability have increased consistently. From this, we can give overall position is satisfactory. This is the end of problem number 16. Now I am reading out the problem number 17. See carefully. From the following data relating to liabilities side of the balance sheet, exactly similar to the previous problem. Liabilities side of Maruti Limited for the period ended 31st December 1986 to 31st December 1989. So 86, 87, 88, 89, 4 years data. You are required to calculate the trend percentage taking 1986 as the base year and comment. Exactly similar. Base year 1986. So here you can see Maruti Limited calculation of 10%. All the items, whatever is given in the problem, same thing I have written. Now 1986 is the base year. So base year, all trend values should be taken 100 every time. So here base year 1986, take all trend values of base year as 100. The other trend values can be calculated as follows. Current year value divided by base year value into 100. Exactly same way. So equity share capital. 1987, 1000. 1000 by 1000 into 100. 100. Similarly, 1200 by 1000 into 100. 120. 1500 by 1000 into 100. 150. That's all. Trend values of equity we got. General reserve. 800 is the base year. So denominator will take 800. Numerator 1000. So 1000 by 800 into 100, 125. 1200 by 800 into 100, 150. Then 1500 by 800 into 100, 187.5. Debentures, base year 400. So denominator you take 400. Numerator you take 500. So 500 by 400 into 100, 125. Then same values 500, 500, 500. So same 125, 125, 100. Bank overdraft 300 denominator. Numerator 400. 400 by 300 into 100, 120. Like this you have to make all the calculations of trend values. Now, we have to give the interpretation as usual. We can give the comment only on the liability side of the balance sheet. We cannot give the opinion about the application of funds, where the funds are applied, what are the assets purchased. We cannot give the opinion. Only on liabilities we can give the opinion. So the information is given only about the liability side of the balance sheet, so no comment can be given on the application of funds. That's the first point. Second, both the long-term funds and short-term funds are consistent increase at a period of 4 years. So what do you observe from this? 100 to 150, 100 to 187.5, 100 to 125. All the values you can see here are consistently increasing. So we can say all the long-term funds and current liabilities are showing an increasing trend over 4 years. The share capital increased by 50% over 4 years. So 100 to 150. That means 50% it has increased over a period of 4 years. The general reserve increased by 87.5% over 4 years, indicating moderate increase in profitability. The general reserve 100 से लेकर 187.5. So there is a moderate increase in the profitability because profit will go to general reserve. Debentures increased by 25% in 1987 and then remains constant. Only 25% debentures increased in 1987. After that, it will remain constant. No issue of debentures afterwards. Next one, all the current liabilities show an increasing trend, but the highest increase in is outstanding liability. See here. All the current liability, bank overdraft, bills payable, sundry creditor, outstanding liability. All these are the current liability. All the current liabilities are increasing, but the highest increase you can observe in outstanding liabilities, 300. 3 times outstanding liability. The growth in both long-term funds as well as current liability is satisfactory. From this analysis, we can conclude our comment that all the long-term funds and the current liabilities are satisfactorily growing. That's it. So this is the end of problem number 7. Inshallah, we'll continue the next problem in the next video.